On June 27, 2025, U.S. President Trump addressed reporters at a White House press conference in which he issued an ultimatum that shocked the world. In the next week or two, Washington will send letters telling other countries what they must pay to do business with the United States. This came as a July 9th deadline loomed for new U.S. tariffs, part of a 90-day pause on additional duties. Trump vowed that countries failing to agree by then would face steep tariffs, effectively demanding tribute. At the same press briefing, he also halted all trade talks with Canada in retaliation for Ottawa's planned digital services tax on U.S. tech firms. In one day, the president declared he would unilaterally impose tariff rates on all trading partners, while accusing a longtime ally of being a very difficult country to trade with. Why make these dramatic moves? On one hand, Trump's supporters see it as fulfilling his America First promise, taking an unapologetic hardline and ensuring the U.S. comes out on top. On the other hand, critics say it looks like tough guy theatrics that undermine trust and prompt other nations to find ways around the U.S. In this script, we unpack the decisions, the strategy and chaos behind them, what various leaders are thinking, and why many analysts and foreigners find these tactics outrageous or bewildering. How we got here: trade truce turns tariff deadline. Earlier in 2025, the White House had instituted a 90-day pause on new tariffs, aiming to negotiate deals with multiple partners. Treasury Secretary Scott Bessent optimistically said proposals from trade partners were very good and that deals could be wrapped up by early September. He even predicted one of the first deals would be with India, but just days before that pause ended, Trump changed tone. He announced that if new agreements weren't nailed down by July 9th, just after Independence Day, tariffs would spike. A deadline loomed for Liberation Day tariffs, as one report called it, and Trump raised the stakes. He'd inform everyone of the tariff rates via letter, no more bilateral haggling. Meanwhile, Trump's aides and allies were talking up smooth resolutions. On June 27th, Bessent touted progress. He said the U.S. had worked out a framework with China rare earth magnets and all, and expected multiple deals, possibly by Labor Day. But hours later, the president painted a very different picture to reporters. The world is being lectured on fees. Trump insisted he couldn't negotiate with 200 countries one by one, so over the next week and a half, we're going to send out a letter to tell them what they have to pay. He cheerfully quipped, "I'd like to just send letters out to everybody. Congratulations, you're paying 25%. In short, the administration publicly flirted with de-escalation, while Trump simultaneously escalated, underscoring his mercurial style and the confusion it sows. Tariffs as tribute, demanding payment for access. What does telling countries what they have to pay actually mean? In effect, it means slapping tariffs taxes on imports on them. Trump's prior tariffs, 10% on most countries, 145% on China's high-tech exports, had already upended global trade. Now he treats tariffs like a sale price. All of the cards are in U.S. hands, he boasts, so others will pay U.S. set rates. At the press event, he repeated a telling boast: "We have all the cards, we have every single one. Economically, we have such power over countries like Canada. And when you have that circumstance, you treat people better." In other words, Trump sees the world as beholden to the U.S. We buy your stuff, so you'll do what we say. This cards on the table approach flouts the usual give and take of diplomacy. Instead of bargaining or compromise, it's like going to a store and telling the shopkeeper to pay your shopping bill. When Trump says he'll write to 200 countries, it's a reminder that he views trade deals as top-down diktats, an unprecedented unilateral move. By his logic, small countries have no choice but to pay up. Critics mock this style as extortionist or gangster diplomacy. Indeed, one observer quipped that such talk is spoken like a true crime boss. The blunt truth is tariffs aren't free money. They rate taxes paid by importers here, U.S. companies, or passed to consumers. The US is actually the world's largest importer, so Americans often end up footing the bill in higher prices. Canada, for example, buys more US goods $412 billion in 2024 than it sells, meaning Americans feed a trade deficit with their northern neighbor, so Trump's demand that other countries pay too. Do Business ignores basic trade math and simply shifts costs onto his own economy. The global trade network stretches across busy ports, but Trump's letters of demand threaten to slam the door. Freight ships may line up at harbors like China's busy Yantian port above, but next week many could face hefty tariffs on arrival. Experts warn this could chill trade flows. U.S. consumers may see fewer imported goods or higher prices, and suppliers abroad will scramble to find new buyers. Already, after Trump's bellicose statements, U.S. stocks wavered briefly, though they eventually hit record highs on hopes talks might continue. Meanwhile, Treasury's own data show that last year Canada was America's second-largest trading partner. In other words, slapping tariffs on a neighbor is a risky move when your economies are so intertwined. Burning bridges with Canada over a digital tax. One specific flashpoint here is Canada. The U.S. had been quietly negotiating a new trade deal with Canada after revising NAFTA into the USMCA. Canadian PM Mark Carney even met Trump in June and said they'd wrap up talks in a month. Then Ottawa announced a digital services tax DST on foreign tech giants like Amazon, Google, and Meta. The tax is a 3% levy on big tech revenues in Canada, aimed largely at U.S. companies, set to take. Canada views it as a fair way to tax internet commerce. The U.S. sees it as a blatant hit on American firms. Trump exploded. On June 27, he declared Canada a very difficult country to trade with on his social media site Truth Social. He called the DST a direct and blatant attack on our country and announced he was terminating all trade discussions with Canada, effective immediately. He vowed new U.S. tariffs on Canada within days. This was retaliation for a law Canada had been debating for years. Canadians saw it as capricious. One White House economist called the tax almost criminal for hitting companies that don't even have a presence in Canada. Mark Carney, for his part, kept his cool. He responded that Canada would continue complex negotiations in the best interests of Canadian workers and businesses. In other words, we'll talk even if you won't. Canadians were already bracing for Trump's steel and dairy tariffs. Now they faced another crisis. Many in Canada and abroad found Trump's tantrum surreal. It was especially absurd given that most of Canada's exports are bought by Americans. Something Trump bragged about: we have such power, but it also means the U.S. economy is heavily tied to a neighbor. Trump justified his attack by claiming Canada had taxed U.S. farmers' dairy up to 400%, and now it had added this new egregious tax on tech. But critics noted that Canada's actions were within its rights. Many European countries had DSTs too, before agreed OECD reforms. By ending talks and threatening tariffs, Trump showed he would rather punish a friend than compromise. It was a display of raw power play. We have all the cards, he crowed, and Canada better listen. Satirists immediately likened it to mob boss logic. Contrasts at the top. Advisors vs. the president. The personal trading posts sometimes conflict with official policy signals. On the same Friday Trump shut talks with Canada, Treasury Secretary Scott Bessent was telling a different story on TV. Bessent highlighted peace deals with China like getting rare earth minerals flowing back to U.S. manufacturers and progress with other partners. He said the U.S. had received very good proposals from dozens of countries to avoid tariffs, and that if Trump could sign 10 or 12 of the 18 most important trade pacts by Labor Day, it would essentially solve the problem. He even remarked that Bessent was working closely with each partner to finalize them. This upbeat tone was undercut by Trump's bombast. Hours after Bessent spoke, Trump told reporters, "We're just going to tell countries what they have to pay." Bessent had offered a measured timeline: September or Labor Day. Trump skipped the niceties and threatened immediate action. The mixed messages prompted confusion. As one Reuters analysis noted, the often chaotic rollout of tariffs was already whipsawing financial markets and even starting to hurt U.S. consumer spending. Then again, when news broke that negotiations, for example, on rare earth minerals with China were going well, stocks rallied to record highs. Clearly, Wall Street is hopeful that cooler heads will prevail even as Trump yanks the red carpet away. How are other leaders reacting? Canada, pragmatic Carney quietly vowed to continue negotiations even as Trump walked away. Canada's leaders likely understand the DST is a small tax on tech giants, but they also know they walk a tightrope with the U.S. They're negotiating to get Trump to lift his existing tariffs on their steel, aluminum, and food exports. Now they'll have to do so with a moving target. Trump just raised the stakes. In domestic politics, Carney must show he defends Canadian interests against bullying, but he also needs U.S. trade for jobs. China, cautious. Beijing has its own grievances. It's already hit by hefty U.S. duties up to 145% on high-tech and other exports and has retaliated in kind. Yet recent reports suggest China signaled de-escalation by exempting certain U.S. goods from its retaliatory tariffs. China may calculate that conceding on rare earths critical for U.S. industries avoids further disruption, even if the bigger tariff war rages on. With this latest fanfare about letters and deadlines, Chinese leaders are likely skeptical. They've learned that Trump can suddenly suspend or resume tariffs on a whim. Any deal made now, say, on rare earth minerals or a partial trade agreement would be fragile unless trust is rebuilt. India, curious. India has been engaged in talks with the U.S. on goods like steel, cars, and agricultural products for months. Treasury's Besant had specifically touted India as a ready first deal, and Vice President Vance even traveled to India, hinting at progress. India's leader Narendra Modi and his trade team may see an opportunity here. If Trump suddenly demands deals, India could negotiate hard, knowing it can wait. Unlike China, India agreed to negotiate mostly on its terms, so they might find it much easier to negotiate, as one source noted. But India also wants to balance good relations with the U.S. and protecting its own farmers or industries. The uncertainty means New Delhi likely stays flexible. It can play off U.S. demands against other markets. Other partners, EU, Japan, Korea, tense patience. The EU and Japan have been in Trump's crosshairs: car tariffs, digital taxes, etc. EU officials had even struck a temporary truce by delaying a collective digital tax until a global OECD solution. Now they watch this drama nervously. A month ago, the EU was negotiating with Trump. Now he's skipping polite conversation. Japan and South Korea are allies but still negotiating their own deal tweaks. They are generally more rule-bound. South Korea's presidential candidate recently said any deal must wait until after their election. Japan's leaders plan to align at the G7 to present a united front. In short, many governments quietly think, Trump is always unpredictable, we better have a backup plan. The price of tariff. Bravado economists warn that Trump's gambit could backfire. Tariffs can be used as leverage, but at a cost. Every new tax on imports typically raises prices for domestic manufacturers and consumers. U.S. automakers or tech consumers could see higher costs if Canada or others reciprocate. The commentaries reflect this concern. For example, some pointed out that imposing so-called wage disparity tariffs on China might just elevate China's standard of living. Factories will shift to producing for Chinese consumers, who then benefit from cheaper goods that no longer go to the U.S. David W. comment. In other words, those Chinese smartphones and toys will sell locally at normal profit margins rather than in the U.S. at elevated tariffs. Meanwhile, U.S. consumers pay more or buy less. Another consequence: loss of trust. Traders and investors hate uncertainty. One analyst warned that after this fiasco, no country can be sure future U.S. agreements will hold, meaning they may rush to diversify supply chains away from the U.S. Indeed, a Canadian business leader quipped that after this, many will treat Trump like a typical game of prisoner's dilemma, once betrayed, now always doubt the other side's word. Some have even mused that extreme U.S. behavior might push the world toward alternatives, digital currencies that sidestep U.S. financial channels, or payment systems other than the dollar-based SWIFT network so the U.S. can't freeze transactions. These are big structural shifts, but they're exactly the kind of long-term reactions critics feared. Domestically, Trump's base remains largely supportive. Many agree tariffs should be high and that the U.S. must dominate trade talks. In fact, one supporter celebrated the tariffs online by noting that importers pay them, suggesting incorrectly that India will foot the bill, a common misconception but one that reflects public sentiment. In reality, U.S. importers, our own companies, bear the tariff up front. Some commentators even think American voters want this volatile style. They see Trump acting decisively if erratically and figure that is better than the stable status quo that they blame for past job losses. Maybe this is what Americans want, one observer noted, and they believe it will MAGA. But many more observers find Trump's demands laughable or terrifying. A Guardian columnist noted wryly that as Trump ended talks, signs of a cooling trade war sent U.S. stock markets to new highs, underscoring the weird disconnect between his words and reality. Commenters around the world have likened his "we tell you what to pay" logic to mafia extortion. One angry plea from a Canadian businessman shouted, "Are you normal?" recalling that past presidents worked out NAFTA and DOSMCA amicably, not by issuing telegrams of demands. In sum, President Trump's latest moves are textbook bully tactics, heavy on bluster, light on mutual agreement. They reflect his long-held view that trade is a zero-sum game and that only American winning counts. Leaders in Ottawa, Beijing, New Delhi and beyond are now circling their wagons and hedging bets. Many will still negotiate, they must, but with a right eye on next steps if Trump tears up the deal. For everyday people watching, the practical message is grim. Expect more by American laws, higher prices on some imported goods, and uncertainty over what deals will last. What can be done? Some analysts urge other countries to push back through international bodies, WTO complaints, for example, or to coordinate collective responses like the EU's joint actions on digital taxes. Others say the best insurance is diversification, build supply chains beyond any one superpower. In the end, Trump's gambit may not get him all the concessions he wants. But it will remind every country that dealing with U.S. trade policy under him is like navigating a minefield. As one critic put it, mighty America has shown no respect for rules or others, only power, and until that changes, the global economy will be watching nervously as each nation asks, "So, Mr. President, what will we have to pay today?"